With Republican control of both houses of Congress and the White House, the chances for tax reform are better now than they have been for years. And businesses need to look at the proposals that have been issued to date to pick out the key themes. While the timing and the actual specifics have yet to be determined, there's a lot that businesses can do now to plan for what may come. Starting with where they came from, the place to start is with the dominant proposal we have right now, which is the proposal from the House Ways and Means Committee Republicans released last summer. It was a plan put forward by Speaker Ryan and Chairman Brady that seeks to move our corporate tax system, our business tax system overall, more toward a consumption tax system. That's one place to start. There's also the campaign proposal from now President Trump that laid out a comprehensive outline for tax reform. And then some people are looking as well to a proposal from 2014 put out by then Chairman of the House Ways and Means Committee, Dave Camp. And that proposal as well could be the basis for some future actions. And if you look at all of those, there are some common themes that businesses can look at to try to gauge where they think tax reform might end up and try to plan now for where they think their business might be in this new system. A couple of those themes are as follows: lower rates and a broader base. All the proposals have in mind significantly reducing the corporate tax rate, but broadening the corporate tax base. And it's broadened essentially by looking at some of the common provisions, special provisions that have been in the code for a number of years that may be deemed by some to favor certain industries. Those may come out in tax reform, so businesses need to be aware of that. In addition, a lot of focus on the international tax system to make us more competitive. And the three proposals, the dominant proposals out there, would move us toward a territorial tax system where more income earned overseas might be free of U.S. tax, and it'd be easier to get income back into the U.S. that was earned overseas at no or lower tax rates. Also, all three, in transitioning to this new territorial system, look at a tax on accumulated foreign earnings. The rates differ, but all of them have an element that would subject those to immediate U.S. tax. So business needs to focus on that as well. I'd start with the House blueprint. It's the most complete, most current proposal we have that we think will be the starting point of negotiations in the Congress and the White House about what tax reform might look like. And I would start with the most radical element of that proposal, which is the so-called border adjustment element of it. And essentially, at a very high level, what that provision would do would exempt from U.S. tax the income from exports and subject to U.S. tax the income from imports. And that's a very important movement of our current tax system more toward a consumption tax system. So you need to throw out a lot of notions you have about how an income tax would apply. So that's the one I would look at. In addition to understanding what that might mean, I would also get very specific about modeling the various aspects of the various proposals. Understand your numbers and how they might fit into this new tax system. It's very important to have, not just at a high level, but specifics about what your company's profile would mean in this new tax world. And again, we have these in outline form with respect to the three proposals and very specifics with respect to the House blueprint and even more with the Camp draft I mentioned that came out in 2014. So businesses really can get a very good sense of how they would fare under the three current proposals we have at this time.